last weekly candle close of this month came in, and this is how it actually played out. If you watch it clearly, you'll see that the candle closes here 114,367 was breached, and the price came below and closed there. Now you have, in just 1 week, you have monthly candle close. So it is going to be interesting to see how this monthly candle is going to close. Now, on the Bitcoin side of the equation, if the monthly candle closes like this or anywhere below 116,000, it would actually show you that the RSI is also going to the downside. Think, the weekly, we argued that it may go down and close because the RSI was pointing you to the downside. Right now, it's not only that, it is the MACD trying to cross to the downside. So watch when on a weekly, the price goes down, the RSI goes down, and the MACD crosses to the downside. Where are you? Yes, it is true. Honestly, it is true. Watch this. This week here, it went up, it went down. I mean, that's a long week. It literally looked like crazy shit. Yeah, we all understand that. But the basic question which you should ask to yourself at that point is, okay, why is that price doing something like that? Because the MACD was crossing to the downside. Yeah? Yeah? Now, watch where are we in the MACD right now. And watch where the RSI was at that time. It was around 63. Right now, you're below 60. So the buying strength is even lower. So I would expect even higher volatility region, because some of these assets are now nearing a long-term regional resistance. Now, we've only been there earlier this year, Jan, Feb. Right now, if you observe that, you'll see long-term trend line, which was acting as a support. Right now, that's being tested as a resistance. Will we break it to the upside? I honestly don't know, but all that I know is that is a resistance which has been there from an extended period of time. And with the weekly candle close, if you observe this, just like what Bitcoin showed before, this asset has now reached that position. So you zoom in, you'll see that the RSI region is playing out, and it's playing out very quickly. So right now, when you do observe how things are playing out, yes, it's volatile. I mean, it's highly volatile. There is no doubt about that. The price is reaching the highest point of that rising wedge. Now, that's just one asset which is right now pumping against Bitcoin. Now, if you go look at other altcoins, say you pick XRP, it has not done much over last 2-3 weeks, right? So if whales really want to attract more liquidity, what would they do? They would pump it like this, at least to test this region, yeah, and then they would move it with a little bit of fake out. That would be the best thing to watch in such a market, right? So if you are interested in the market and its action, also observe not just the RSI but also the MACD and price action. If it helps you, then use Heikin-Ashi, because that is exceptionally great method to watch which side of the equation the momentum is shifting. Yes, it's volatile, it's very volatile, but watch. When the RSI crosses its moving average to the downside and the candle turns red, that is a great area to argue like, okay, that is substantial. You cannot play with it, or you really don't want to go against it. Now you pick up, say, Bitcoin itself and see how it's playing out. Yeah, it does look attractive. Now watch the monthly. It hasn't turned negative yet. So just the first red candle on a monthly here can be heavily volatile because everybody is highly bullish on this asset and asset class. Now watch the total crypto market in here. This is the weekly candle close for the total crypto market, and you're still here. You barely closed that in green, which is still good for bulls because it closed in green. Now, when you observe this on a Japanese candlestick, you also see, okay, yeah, it is true that it closed in green on a Heikin-Ashi, but risks are mounting up. Now, what do you really mean by risks are mounting up? Watch this. One was an inverted hammer. Yeah. Then one was a hammer just before that. So now the market is trying to say to you that yes, it is true, but that the Heikin what it is saying is true, but you have two candles which kind of argues there's a lot more in negative than on the positive side of the equation. So if you're observing all of those, then maybe the first thing which you may want to look at is the exact same scenario which played out before, and how did the price action come in. Like if the price action did something like that last time, we should not actually go ahead and say, okay, we neglect all of that, because it may not be the best argument to make. Like we can make a lot of different arguments, but if you can fit your arguments based on what happened before, and if it looks similar to that, then it matters. Yeah. So you come up here, you watch a couple of hammers, liquidity, and then the price goes down. Now the exact opposite, inverted hammer at a support and it goes up. So that kind of makes things a little bit easier to look at and to debate on total crypto market. Now you move on to the altcoin market equation. Now the altcoin side of the market shows you, yes, there was a long wick here where it showed inverted hammer before, then it confirmed that inverted hammer. Right now the retest of that inverted hammer is happening in front of us, and at that point you're also observing the fact that weekly candle closed with another inverted hammer. So yes, the Heikin would still be green for sure, it is still green, but when you do observe the fact that the weekly is trying to make or bring in another negative divergence, this is where things get a bit more interesting, right? So keep assets, like individual assets, in your in front of you, which is okay, it is fine, but also observe the fact that what they are doing on a higher time frame would be much more helpful. Say for example, you look at this, you'll see, okay, that is where we are on a monthly for this particular asset, and if you observe this from 2021, you kind of see, okay, at that region there's a lot more selling pressure entering the market than the buying pressure. Now how do you understand that? Because that is one of the primary reasons why the price is now going above that and is getting rejected each time you approach that zone. So right now, watch for opportunities if you are a bear, because the price is reaching there. Now how do you look for that? When the Heikin candle closes the first day in red, understand, okay, something can start at that point. Now, if you are very conservative, watch for a 3-day candle, because usually if you see when the price goes up to a resistance and the first 3-day candle closes in red, that is a time for you to take the decision. That is a time for you to execute a decision. The first 3-day, that literally shows you, yeah, there can be fake outs for sure, but I'm fading. The buying momentum is fading. My momentum, meaning the red shows the selling momentum, it is trying to increase on itself. That means if that happens or appears somewhere here, you can actually use that. Now in the live trade, for sure, we're using 15 minutes, we're using 30 minutes, we're using 5 minutes, because the live one-on-one sessions are like 1 hour, or some people take 30 minutes. So if you're taking 30-minute session, then obviously we don't have 15-minute candles to play to find the right time to enter and exit so that I can teach you what I do. But at that time you're using a 5-minute candle, but still it's going good. What I'm trying to argue here is if you're on a higher time frame, the risk which you're playing with is substantially lower. That on a Heikin helps you much more. Now say you want to play with the Renko chart, it's another perfect tool when you use it on a daily. You don't have to go on to a 3-day. When you use Renko charts, you just stay on it on a daily. The first red candle close, you're like, okay, fine, I understand that the direction is changing, and that's the history. Each and every time you go back 3 years, 4 years, 5 years, and you notice that, okay, that's the exact same thing which is happening in the market. You can use that for any asset you want and then come back and watch what it shows for Bitcoin. One of the primary reasons why a lot of altcoins are showing I'm going 5x, 10x, 20x, but then they are barely doing it 30, 40, 50% is because of Bitcoin. That guy slowing down, dropping, is dragging the altcoin. It's weighing on the altcoin market. So the moment you see Bitcoin breaking through this support, clearly getting rejected at that point, it may actually bring in some issues for altcoins, especially those who are weak, meaning those who haven't actually done much in the last 2-3 weeks, while this guy actually went up a little bit. there would be assets which pumped 100% when this guy actually moved 5%. Yeah. So they may actually do a little bit better when this guy actually wants to retest this region, if it actually does that kind of a move. Now the argument is based on this. This has been a support, a retest, and a bounce. So this is now acting as a support. Now it's retesting that. So if it managed to hold on to the first level, it will go back up. But keep in mind, if it gets rejected here just below 114,000, yeah, now you're watching a retest of this, which is 110,000. That's a lower low as of now with a lower swing high, which may demand a lower price point as the next support. So if you break that point, which is 110,000, okay, now there is a little bit more concern for the bullish side of the equation and a lot more relaxed approach for the bears, because if the bears are looking at this, they would argue, okay, a break of this point 110,000 is going to confirm a macro, not the micro, a macro double top equation, and that getting confirmed on daily chart is a lot more good on the positive side of the equation for the bears. Yeah. But usually we see this kind of a move. Yeah. If they really want to push to the downside, they would do this before it actually pushed down. Yeah, they would like to attract more liquidity, saying I'm going up, and then push it to the downside. So don't go highly levered on both sides of the equation. Understand this is that turning point of the market where it plays out a lot of tricks. Yeah, you see what I'm talking about here. You'll understand what I just showed you. You'll see that this thing happened. Yeah, but all of a sudden it kind of bounced off a little bit and then went below. Then it again retested and then dropped. And that drop was the first capitulation leg, which confirmed I'm going to go down. Yeah. Since then, it was making multiple continuation patterns, just like this one is what you're watching in Solana. Yeah. You saw this thing. You're watching the exact same thing in Solana right now. You're playing somewhat like this. You're reaching this territory. You pick up Solana and you go on normal candlestick chart and you pick that pattern up. Let's see if you saw something similar in Bitcoin and how that played out historically. And that trend line, you can extend it all the way back. So it is a valid and strong trend line. Now, are you trying to pick the exact top if you're shorting, like, if it happens to reach that 217, 218 region? Yeah, that's perfect. Yeah. But if you zoom a little bit out, if you think this guy is about to come down, yeah, this is the continuation leg, the first one, then the bounce, then this one. So anyway, here, if your ROI is anyway here, this absolute top, you don't have to pick it. Now, if you get it, you're lucky enough and good, perfect. But if not, don't worry, because it's going to come down to these points. If the mark, now think about this, say your average is 160 and the price moves to say $70, you get 57%. Now, those who shorted from here get 66%. Yes, they got 8% more, but yours is also not bad. You see, it's not much different when you short. When you're trying to pick the top, yes, you get 5% extra and all, but the risk is substantially higher. Good. So I hope you guys get value from that. And if you did, smash the like button.